Welcome to the Slop Farm. Enjoy the video.
In this video, I will explain how to file quarterly income tax returns. Many self-employed individuals, or those with significant income not subject to withholding, need to pay estimated taxes throughout the year. This ensures you meet your tax obligations for income tax, self-employment tax, and potentially other taxes. Making these 4 payments on time helps you avoid penalties and manage your finances effectively. Generally, you must pay estimated tax if you expect to owe at least $1,000 in tax for the year. This applies to income not subject to withholding, such as earnings from self-employment, interest, dividends, or rent. The 4 payment due dates are April 15th, June 15th, September 15th, and January 15th of the following year. Remember to adjust your estimates if your income or deductions change. To calculate your estimated tax, you'll use Form 1040-ES, Estimated Tax for Individuals. Begin by estimating your total income, deductions, and any credits you expect for the entire year. Once you have your estimated annual tax liability, divide that amount into 4 equal payments. It's a good idea to review your financial situation quarterly and adjust your estimates as needed. There are several convenient ways to pay your estimated taxes. The easiest method is often online through the Electronic Federal Tax Payment System, or EFTPS. You can also mail your payment with a payment voucher from Form 1040-ES. Many tax software programs can help you prepare and submit these payments. Always keep meticulous records of all your income and expenses.
Thanks for watching. Consider subscribing if we helped you today.